Started. Right, Stephanie. I'll be right here if you need me.
Okay, thank you. So good afternoon, everybody. It is Thursday, right? Thursday, August 20th. And so we have a great session ahead for you. We have Jojo and Sasha from House America Financial. And, we're in a hot market, guys. I mean, who would have ever thunk that it would be this insane right now, right? So that V-shaped recovery definitely happened in our industry, like insane. So without further ado, I wanted to I'll have the gentlemen get started and share all their amazing information with you. And please feel free to text in or type in any questions that you have on, of course, on Facebook, and we'll address everything we can. So take it away, boys or men, guys.
So, Sasha, do you want to get started? Well, let me give you guys a preview of what we're doing today. So basically, we're going to talk about alternative products. They call them non-QM or non-qualified mortgage products. And that definition is for those clients that do not fit into the mold of the Fannie Mae, Freddie Mac conventional lending, whether it's an income-related, credit-related, or other issues that may be, although they are credit-worthy, it doesn't exactly fit that mold. When COVID hit, those products went away literally overnight. And ever since, in the last week or two, and Sasha will echo this with me, it has made a comeback in the market in good force for that matter. And it's an essential product because not every borrower buyer can fit that mold for the conventional. So without giving away all the information, I'm going to defer to Sasha because he's going to talk about some specific products, and then he'll turn over to me and I'll talk about some other products and wrap our meeting today. Sasha.
Thank you, Jojo, for the introduction. Hope everyone is doing well, staying safe, and staying out the heat. As Jojo mentioned, these programs are not meant for everyone. They're made for specific clients who normally wouldn't fit under your traditional umbrella, which is your agency guidelines or even our jumbo guidelines. People who are mostly self-employed, who basically make money, but they don't show it on their tax returns. This is something that we used to do a lot. I personally did a lot of these prior to COVID. This is my expertise, if you want to say that as a cliche or something. But at the end of the day, we want to start doing these more and more and more, as Jojo said. These programs just made a recent comeback in the past 2 weeks. Lenders have changed their guidelines a little bit in regards to qualification, prepayment penalties, things that I'll go over it as we go on with this presentation. I wanted to kind of give you guys a screenshot of exactly how these things work. And if you guys are interested, I'll be happy to send these documentation to you guys later on. I can email it to you. Just shoot me a quick email or text, and I'll be happy to share these documents with you guys. The bank state program, as I was saying, is mostly for self-employed borrowers. I'll give you guys an example of a client, and then that way you guys can have an understanding how these things work. Let's assume we have a client that's looking to buy a property in the $700,000 to $800,000 range. They've gone through your traditional lenders. They cannot qualify. Their income is not sufficient enough. And they come to you say, what are my options? Then at that point, you would definitely guide those clients to us. We have many, many different options. Jojo will cover some. I'll go over the bank statements. What we do is we look at 12 or 24 months of bank statements, business or personal. So client is self-employed, doesn't show enough income, but obviously they're depositing money in their business bank statements or their personal bank statements. So how these lenders look at these bank statements are when it's a business bank statement, 12 or 24 months, the difference really is when you provide 24 months, the rate is slightly lower. 12 months, I would say it's a little bit easier because less documentations, but the rate is slightly higher. What they're looking at is your total deposits monthly. They're not looking at your withdrawals. You can be depositing $10,000 a month and withdrawing $9,500 a month. they're not looking into that. They're looking only at your deposits. And what they do is they average the 12 months or the 24 months, depending on which route the client wants to take. What happens is if you end up using your 24-month business bank statements, there's something called the expense factor, meaning your CPA has to provide a document saying the client's expense factor, for example, is 20%. Meaning if you're depositing $10,000 a month, multiply by 20%, you can use $8,000 of that as income for its qualification. In this scenario, most of my clients that use this are LLC owners, corporation owners that show a lot of deposits in their bank accounts, and their CPA is able to provide us an expense factor letter, and we're able to easily get you qualified for that. My personal favorite one is your personal bank statements. Because they can use 100% of your deposits. No expense factors at all, no CPA letter, which makes it easier, less of a headache, and obviously your client doesn't have to chase his accountant to provide the CPA letters. So personally, I like a 12-month personal bank statements. I know the rate's a little bit higher. I'll get into that shortly. But like I said, we can use 100% of deposits. No matter what deposits are, no sourcing of the deposits, so they don't look at where the money is coming from, which is a big thing in our industry when it comes to the large deposits. So you can have multiple deposits for large amounts going into your personal accounts, and there will be no verification towards that. This program, unfortunately, does have one bad thing about it, which I would say is the prepayment penalty. Prior to COVID, there used to be a 1-year prepayment penalty on these programs. Now lenders have increased it to 3 years. This is across the board. We have, I would say, about 4 or 5 non-QM lenders that we use. All of them are doing a 3-year hard prepayment penalty. And I've gotten this question a lot in the past couple of days in regards to how do we get out of the prepayment if the client wants to pay for it. So the answer to that is 6 months of interest of the mortgage. So if your client says, you know what, I want to get out of this loan within 6 months, a year span, and I want to be able to get out of this prepayment penalty, is 6 months of interest, and you'll be fully out of this loan, and you can refinance out of it. As far as some highlights of the loan, so you guys have an idea how these things work, I can go up to $3 million loan amounts for this program. So if you have a high-end client that doesn't qualify traditionally, we can definitely get them qualified based on the bank statement program. We need a 680 FICO minimum. It used to be 600. Now they've raised it up to 680. I can go up to 85% loan to value, which is great, especially for those jumbo clients that are looking for over $1 million properties. This program really fits their bill. As far as some of the other things that I think you guys should know, as far as PMI, mortgage insurance, anything over 80%, they'll still require PMI. Anything under 80%, no PMI required. As far as seasoning for bankruptcies, short sale, deed of lieu, all those things is 4 years. Anything under 4 years, we will need a good letter to offset that. And usually the hardship letters that I've gotten hasn't worked. So the chances of that are pretty low. But I've seen 1 or 2 here and there, but very low. But it's 4 years after foreclosure or bankruptcy that we can get you a loan. As far as the rates, if you use 24 months of bank statements, the rates are in the low 5s. I would say around 5.125, 5.25%. This is with no fees, no points, small lender fees that most lenders have, and that's about it. If you end up using 12-month bank statements, your rates are around 5.5 to 5.75 in that range, and once again with 0 points. And this, like I said, this allows you to get your client qualified based on the bank statements, and be able to get them the house that they're looking for. Another last note that I want to mention, that also interest only is available on these loans, which is another great option to have. A cash out refinance is allowed. Second home is allowed. Investment property is allowed. So they pretty much want the entire business when it comes to non-QM lending. And this is all lenders across. This is 4 or 5 lenders that we use. I've checked the guidelines in the past couple of days to make sure they're very similar, and they really are. With that said, I mean, there's really nothing else that I have here that's important. If you need anything else, please let us know. Email me, or you can even put in this chat here. I'll be happy to answer any questions. And then Jojo, you're up, my man.
Thank you. So before I start, does anybody have any questions for Sasha that you want to put in? You can tell the man is the expert. He's got no notes he's reading off from like I'm about to. So he knows this like the back of his hand. So if you don't have any questions now, but we will give a few minutes. And if you don't, feel free to reach out to him by email or by cell phone. And I'm actually going to reach out to him so I can learn a little bit more about the 12 and the 24. I know about them, but not like the way he does. So give a couple seconds. If anybody have any questions. Yes.
We did have a question on Facebook Live saying, what's the name of the program?
So it's
a bank statement program. They call it the bank statement program non-QM lending.
Great, thank you.
Just to add to what Sasha said, so there really shouldn't be, well, I shouldn't say they're not, but most often there's a solution out there. It's either they have the money or they have the score or they have both. But either way, we have solutions. So I think the purpose for today's conversation is to don't turn down the client right away. Make a phone call, reach out to me, to Brian, to Sasha. One of us will be able to give you or point you to a direction that may entitle or at least allow the client to get that house instead of being turned away. There's always possibilities that we can do.
Georgia, just to piggyback on what you said, with lenders coming back after COVID, a lot of programs that weren't available in the last 4 months are available again. So don't think your client doesn't qualify because they went to Chase or B of A and they got a decline letter. It doesn't mean anything. We have so many different programs, so many different buckets that we can find a way to make clients qualified. Just give us a shot, give us a call, give us an email. Worst case, we'll just tell you we can't do it. But usually within 24 hours, we can definitely get you guys an answer whether we can do the deal or not. And Jojo and I are available to you guys all the time. You guys are more than free to text me, call me, email me. The time of the day, it doesn't really matter. We always say we're working 24/7. So please don't hesitate to give us a call or shoot us an email.
Okay, now it's my turn, my part. So the program that I'm going to go over with is a special one. We've seen this back in 2008, 2007. It has made a comeback in some format of sorts. It's pretty similar. It's really called, we used to call it, and we still do call it, called SIVA, Stated Income Verified Assets. And it has a few other names today that you'll see out there, alternative documents, so forth. But the main purpose basically is to get a client qualified who does not show income conventionally with tax returns and W-2s, what have you, but has tremendous assets, maybe 30, 40, 50% down payment is available to them. And this program fits that profile. Let me explain. For example, a client is looking to buy $1 million property that has $300,000, $400,000 sitting in the bank, but cannot show any income on his last 2 years of tax returns, or even 1 year for that matter, because he's self-employed, what have you. With the 30% down payment, he can purchase this property owner occupied, and the rate can be as low as 5.25%. That's really high. Well, listen, rates there are 2.5%, 3%, 5.25%, no income verification. They can get in the house, maybe stay a year or two, redevelop the way they profile their financial statements, and come back there later on and refinance it. But the message here is you can get in, you can get the house, you can buy the house. It's also available for non-owner occupied up to 65%, meaning 35% down payment. You can get an owner occupied property, stated income, verified assets. What else? It allows for cash out refi up to 65% of the value, as long as you have 700 FICOs. Loan amounts are typically up to 2 million. I've seen some programs we have that go up to 2.5. The sweet spot is 1.5 million and under. You're going to get the better rate. It is available in 30-year fix, 15-year fix. If you remember the ARM programs called the 5-1, 3-1, and 7-1 ARM, meaning that are fixed for 5 years, 3 years, or 7 years, then becomes an adjustable. It is also available in those programs. But the trigger, what these lenders are looking for is the not only just the down payment money, but they're also looking to see what kind of reserves do they have left in the bank after closing. A client that has 6 months, 12 months, 36 months of reserves, 36 months being the best, will get the lowest possible rate. Because lenders saying, well, this guy has enough money in the bank to keep making payments for a few years. Risk is lower, therefore we can offer a better rate, and so forth. You typically find that the lender will ask for a CPA letter to back up the file, especially if the client is self-employed, and it's very common. CPAs are actually very aware of these letters being requested of them from their clients, because every time they do such a thing, it's almost always being requested by the lender. Sweet spot on the FICOs for these products, 700. If you have at least 700, you're in. There are some programs that allow you to get in at 680, but the sweet spot is 700. Above that, 740. Again, you're going to get a better rate. I mentioned earlier alternative documents. There's another program out there that one of our investors gives us. If you cannot, for example, you are a salaried, let's use Sasha and I. We get paid W-2s and pay stubs. But I'm willing to bank that Sasha and I do not show that on our tax returns. It doesn't show it very well in our tax returns. So there is a sweet spot for that, a program in which instead of tax returns, which may be a negative profile for you, they will take your W-2s and pay stubs only. So if you do a lot of deductions, W-2s and pay stubs is another program, and they call that alternative doc program. Lastly, another highlight is they are available in interest only, just like what Sasha said earlier. Interest only payment options are available for these programs, typically on the ARM product and not on the fixed rate product. So that, in a sense, are the highlights of the stated income verified asset program. I do have a couple more that I'll close with, but one thing I can tell you is after today, I've got this in a nice highlight sheet that we can send out to you guys, and you can use it, post it on your wall, and it's something that you can look at in case when you're doing your outbound calls or follow up with clients. Oh, Jojo and Sasha mentioned that. Wait, there it is, and we'll send it out to you. A couple more programs. Another one of our investors can now do non-warrantable condos. What is that, Jojo? What are you talking about? So condos that cannot be approved or are not approved for conventional loans because of either a budget deficiency in their HOA deficiency or a pending litigation. We have a program. The sweet spot is 35% down payment. We have a lender that will do the loan on a non-warrantable condo. Last two things, because I get these questions still with some people. Have you heard of the ITIN program? It's back. It's back in force. So clients that we have out there that do not have a traditional Social Security number, that have the ITIN number, individual tax identification number, that program is back. It is today with 30% down, 700 FICO. It's got a 6.25 30-year fix. And if you hear that word from clients out there, you know it's an ITIN, know that we have that. Last but not least, I've been getting calls about this as well, manufactured homes. We do have a lender for manufactured homes. The sweet spot is it has to be permanently affixed to the land. Minimum is 640 FICO, and it's available in conventional, FHA, and VA traditional rates. So prior to COVID, all of this went away. Now, towards the middle and maybe hopefully the end of this COVID pandemic, these products have made a comeback strong. More lenders are opening up the gates again for these products. So our message this afternoon from Sasha and I is, don't say no just yet. Make a phone call, and I'm sure we will work our butts off to find an answer for you. Because traditional banks Like Chase, B of A, Wells Fargo, they do not carry these products. They do not want anything to do with it. They don't have it in their portfolio. So they will just turn down the client, and that's the end of it. And we love those calls from a client that's gotten turned down from Chase or B of A because we know there's possibility that we can make it happen. And that's my piece today. So I'll open it up for questions. And again, we'll send this out to you guys later on in a document for future use.
Okay, I do have, thank you both. And like I said, if there's anything additional that you want to share, we are totally open for that. I do have one question here from Mona, is can real estate agents utilize the bank statement program?
Absolutely. I mean, it doesn't affect what line of business you're in.
Mhm.
As long as you show deposits in your bank statements, it's pretty much as good as gold. All we do is verify 12 months or 24 months, whichever shows the higher deposits, and we can qualify you based off of that.
Okay, awesome.
Go ahead. I'm
No, go ahead,
typing in
Jojo.
myself. Sorry, I'm typing in my cell phone number because someone asked for contact. And Sasha, I think I'll send Sasha's later to everybody, but that's mine. Anyway, someone asked a question. Sorry.
Yeah, because I put your contact because most of our peeps are on our Facebook.
Loan amounts are typically up to 2 million.
So I have it. I put both of your contact information in the Facebook post.
Excellent.
Let me see.
I just put my cell phone on the chat as well, too, guys.
There it is.
So what loan program here? Let me close my door because I can hear Jojo. So hold on.
I'll mute myself.
I don't want everybody to get all confused. So are you seeing, what is the most popular loan program that you guys, are you seeing one being more utilized? Is it mostly conventional or mostly FHA? Are you getting a lot of non-QM? So kind of what are you seeing? Is or just a mixed bag?
Stephanie, on my end, the non-QM market has been dead for the last 4 months.
Yeah.
We recently, about 2 weeks ago, started getting some of these programs back. In the past 2 weeks, I think I have gotten 2 deals that have been both bank statement programs. There's another program. It's called a cash flow program. I don't know if Jojo covered that. It's for investment properties. It's for investors who own multiple investment properties that want to buy property stated without showing tax returns.
Mm-hmm.
So those are pretty much our 2 most popular non-QM programs that I deal with. And like I said, they're starting to come back slowly.
And I think that as the word gets out, and that's probably what we're trying to do today is inform the agents because they're going to be the transformational agents of this communication that these products are back. And so some of the clients said, you know what, that program went away. I'm going to wait till next year, blah blah blah. But little do they know it's made a comeback. It's up to us to educate them, isn't it?
Yeah, very interesting. So a question for you guys, obviously not with loan programs, but just the process, because it seems like, we're really feeling the delay or the backlog now, right? There for a while,
yeah.
They were, you guys were like, oh, we're on it, blah, blah, blah. And then July hit with all these openings. And then, June hit with all these openings, July with massive amounts of closings. And now I'm starting to see more 45, 60-day COEs, right? Or, time frames. Is that the same with you guys? How far pushed, what's the deal with appraisals? How far, what's that look like for you guys as far as time frames and appraisals?
So on my end, Stephanie, as far as purchase goes, 25 to 35 day close.
Okay.
25 days are on W-2 borrowers, 35 days roughly for self-employed borrowers. Self-employed borrowers has, as everyone knows, gotten more strict, more difficult to qualify. They want 3 months bank statement to make sure COVID hasn't affected their business. They want a year-to-date profit and loss. So self-employed borrowers is a little bit more difficult. We're still able to do most of these borrowers and satisfy their needs and get them the loan that they need. But 25 to 35 days is average purchase time. Prior to COVID, we were between 15 to 20 days if you want to rush it.
Okay.
Refi, I would say 45 to 60 days is our normal time frame as far as refinances goes.
Mm-hmm.
And I
Yeah.
echo what he
So
said.
how long is it taking to get appraisals done? Because I know, some of the big, like Wells Fargo, blah, 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 all the big, Mac Daddy people, companies are taking longer. It seems like, they're having a hard time, and I'm trying to get, just remind the agents, hey, give you guys a shot because you guys have a little bit more control over the time frames and still seem to have good time frames. So what are you seeing on the time frame of your appraisals? Obviously they must still be good, but are you guys having issues with appraised value?
No issues as far as appraised value. This one good thing about us is we use in-house appraisers. So we have an advantage over Wells Fargo, Chase, Citibank, majority of those lenders who use a third-party vendor. We use a third party that works with us, that has a contract with us. Appraisal
Nice.
turnaround times, I would say we're doing 10 to 14-day contingencies right now.
Okay.
And we're doing 21-day loan contingencies for most of our new purchases.
Okay.
But we haven't had, as far as I'm aware of, we haven't had any issues with appraisals at all.
Nice. Good to hear. Jojo?
Yes, ma'am.
Did you have any additional comments on that?
No, like I said, we're gonna send out this information to them. They'll have a nice cheat sheet for future. And again, repeating the message today: don't say no. Or wasn't it somebody said just say no? No, we're saying don't say no. Because there's a chance we could possibly do it, especially now.
That's awesome. Here, I'm trying to go back. I just want to make sure that we're not missing any questions here. Sorry, guys.
Stephanie, just one thing that I forgot to mention.
Just want to make sure that we're not. Okay. Okay, here's a question. He says, I have a more general question. Of course, it's okay, Alper. It says, this question came out this week. A couple with a child thinking of moving in California. Husband offered a new job here. They have green card but no credit history since they never lived here. What is the possibility of getting a mortgage here if they want to buy a new house? Is it possible? What are the pros and cons?
It's definitely possible. From what I understood, they have income, but they don't have a green card, correct?
Yes, they have a green card, but no credit history since they've never lived here. So they're thinking of moving into the U.S.
Very doable.
Okay.
There is a program.
We will need some information. We have a foreign national program. I mean, look, guys, there's many ways we can qualify. What I always say to my agents is like, look, send us what we need. Let us analyze the documents, and we'll figure out a way to qualify them. It's really hard to say, because we have so many different programs. It's really hard to say which program they will qualify for. That's kind of our job, myself and Jojo, to identify which program that loan falls in under. And we do our best to get you the best possible deal. So if I have 3-4 lenders that are looking at the same deal, I'll shop around to see which one gives us a better rate, less documentation required, and quicker close.
Nice.
And then Stephanie, back on the bank statement program, I forgot to mention one thing. I have a lender right now that if you guys need a quick close, I can close in 10 business days. It's a non-QM bank. I can use the business bank statement, personal bank statements, or the cash flow program. If your borrowers, clients are not rate sensitive, their rates, like I said, it's in the 5s, low 6s, but we can close in 10 business days. I'm doing one right now as we speak.
Wow. That's crazy.
Yes, it is.
Crazy. Exciting.
Exciting time. Sorry.
Yeah, so for, one thing that we shared out of the Calabasas office, at least, we had as far as units, right? We had our biggest closing month in July than we've had in the last,
Hmm.
10 years. Is that what kind of crazy stuff are you guys doing over there? Because if we're doing, you guys gotta be doing the same.
Yeah, same here. I mean, we are super busy. I mean, I think we had a record funding last month. I think we funded about $90 million last month.
Wow.
So
65 units.
we are super busy. We are looking to hire more staff. As Georgia can tell, in some of our staff meetings, we are super backed up. We're lacking underwriters, we're lacking processing. It's gotten to a point where, as loan officers, we are starting to do most of the work now because our assistants can't handle the load. And the rates being so low, everyone's taking advantage of the rates. They're refinancing or buying a new property. So we haven't slowed down. And I think this month we're supposed to exceed 100 million, if I'm not mistaken.
Wow,
So
congratulations, guys.
Thank you.
What to echo what Sasha was saying, it is not that the service levels have come down. What the company has done is actually asked everybody in the support systems to carry more load than they usually do. In the meantime, the leadership is out there heavily recruiting, trying to find additional sources, additional processes, and underwriters. The one thing that the leadership of this company understands is you can never let go of service quality. Once you lose that, that stays in the street for a while. But you can task your resources and employees for a short period. They'll gripe a little bit and so forth, but at least we can maintain the service, and that's exactly what this company is doing. That's the reason why Sasha was saying closing times. We're not feeling any really major delays. Even though we did 90 million last month, but it's a short run because in the next few months, I'm sure we will ramp up in our support staff hiring.
Nice. Yeah, you guys, I mean, you guys are great. It's just been a wonderful experience. What do you think your ratio are of business coming in, purchases to refis?
Sasha?
I would say prior to COVID, I was probably 85-15 purchase refis. Now I would say I'm about 60-40 refi, 60% refis and 40% purchase. So the purchase business hasn't, I mean, it slowed down a little bit, but it's back up again. But the refi market is booming right now.
Yeah.
So in essence, 60-40, what Sasha is saying, in what I see in the industry, it's not that the purchase market has dropped. That number is there, but the proportion of refis have just increased. And now, because right now, everybody that had a 3.5% rate 6 months ago, again, are back here applying because they know they can get 2%, 2.5%. Heck, there was an advertising the other day, 1.99%, 30-year and 15-year fixed. That's crazy.
Good Lord.
Yeah, everybody's out there on the refi, and for the good and the bad, it's the business. It's there. They're gonna want it.
So I apologize if you guys had mentioned this. So a couple of weeks, was it? I don't know. It was last week or the week before that you had said that FHA was 2.25. Is that still the same, or has it got?
Yeah, FHA is still the same. I actually priced out a loan today. We were at 2.375 with 0.5 point credit, meaning a rebate of 0.5%. So the FHA is good. I don't recommend it for everyone. It's for specific clients. I always prefer to go conventional with most of my loans, unless the loan doesn't fit the conventional bucket, then I go FHA. But FHA is good. The rates are lower than conventional. If someone's very rate sensitive, we can always go the FHA route. Absolutely.
And to add, our company actually, because I have access to different pricing engines of other companies, and as I look, our company has the lowest FHA rate. I couldn't believe it. I thought I was dreaming
we do.
for a second. But it is 2.25 at one point, 2.125 1 point. I mean, that's just low FHA rates, period. Great plug.
Definitely, I shot this with Chase, BofA, and Citibank. I have friends that work there, and they were all surprised how low our FHA rates are. Coming from them, it's a huge compliment to the management company to be able to afford us getting these low rates for our clients. I mean, I've been doing this since 2003. In 17 years of doing this, I've never thought 2.5%, 2.75 rate will be realistic. When I started, it was 8% interest rate, and people were jumping all over it. So hearing 2.5, it just makes me cringe. But that's where we are, unfortunately, because of COVID.
Yeah, it's just mind blowing that we're, this perfect little storm that we're in. I mean, it's an amazing time for sellers, right? And then it's an incredible time for buyers or current homeowners. Oh, so is there a 6 months? So do you have to wait 6 months before you refi again? What does that look like? So if someone, like you just mentioned, okay.
Yes, you need not 6 months. You need to wait after 6 mortgage payments to refinance. And just consider this also. The refinance process takes about 60 days now. So technically, you can start the refinance process after your 5th mortgage payment. By the time we close, you've already made your 6th payment. By the time we get to the 7th payment, we have refied your property. So you don't have to wait a full 6 months. You can wait after your 5th mortgage payment and give us a call, and we can start the process. And we're doing a lot of those. A lot of purchases that I've done in the past 6 months, I'm refining every single one of them.
Yeah, and that's something that the agent should be talking to the people, their past clients.
Yes,
right?
Absolutely.
And because it's another great touch to say, hey, do you know, blah, blah, blah. You can save yourself a couple, depending on where you're at, $100, $200 a month or more or what.
Yeah, 6 months ago, Stephanie, just to give you an example, we were at 3.625. As of last week, we were at 2.875. So that's a huge, significant decrease in their monthly payments. So for anyone who wants to save money, that's the route to take. And I mean, who wants to pay more every single month, especially in interest to the bank? So take advantage of it. Call your old clients. Let them know the rates are lower, and we'll be happy to jump in and help you guys out with that.
And Stephanie, I know that you have your mentee program. That's actually a great door opener on an outbound call for your mentee program when they're making the calls. Instead of using the traditional, are you looking to sell, buy, or anybody for the next 2-3 months? This would be a great outbound call, isn't it? Hey, have you heard that the rates are in the 2%? Is that something that could be of value to you? And maybe I can help. You have a few minutes.
Yeah, no, absolutely. I mean, there's so much value add that the agents can, having these conversations, educate, informing, and serving, all their database and continually. I mean, because some people we're in that space, right? So we think it, we breathe it. It's our lifestyle, the whole bit to know all this kind of stuff. And the consumer out there may not even know. May not even know what's really truly going on, right? So if you let them know, hey, what's your interest rate now currently? Hey, are you looking to a new house? You can afford much more of a home than you currently have. I mean, there's so many ways that conversation can go. So
absolutely.
Yeah. Good point, JoJo, for sure. Golly, Miss Molly, let me double check. I don't see any new questions here. What would be, do you guys have any, that was a good word of wisdom or advice for the agents out there? Hey, just open with this one. Sasha, do you have anything else that you want to add before we kind of?
I mean, what I would say to all the agents, try to utilize this as much as possible. We can bring a lot of value to you guys. Open houses, just us being there, having a lender available to you guys, providing that knowledge to your clients right on the spot when the lead goes. You use it as much as possible. Don't think that we're busy and we don't have time for you guys. Really, Jojo and myself are dedicated to you guys to do as much as possible. That's the only thing that I would tell you guys. Try to use it as much as possible. We're available all the time, email, call, text. And like I said, if you guys need us to come to your open houses, I used to do a lot of these prior to COVID. I kind of miss it a little bit. So if you guys need me to come out there, bring some flyers and bring some food and some good stuff to represent you guys, I'll be happy to do so.
That's awesome. Thanks, Sasha. Okay, well, I don't see anything else, guys. So I appreciate everyone being on the call and everybody out in Facebook land, KW Shares. So thank you, Jojo and Sasha from House America Financial. You guys are the bomb for sure. And we just appreciate all your hard work and dedication to the agents and their clients.
Good talk.
Thank you, Stephanie.
All right, thank you. All right, have a great day.